AI is changing lending across Asia Pacific, but only 18% of APAC banking executives say their organizations are using Gen AI in production. To assess what this means for credit markets, we speak with Omar Akkor of Moody's. Welcome, Omar. Let's start with what's driving the shift from seeing AI as an efficiency tool to viewing it as a competitive advantage in lending. What has changed?
APAC banks are no longer looking at AI as a back office efficiency lever. Initially, they explored AI primarily to enhance operational efficiency and reduce costs. But they are now increasingly leveraging it as a strategic competitive tool to drive growth, improve customer experience, and develop innovative financial products. The 2025 survey by Moody's and Asian Banking Forum found that gaining advantage over peers and market positioning surpass cost and efficiency as the primary driver for AI adoption. Banks are now using AI to sharpen credit decisions, differentiating crowded SMEs and commercial and industrial segments to defend their market share.
But where are banks facing the biggest challenges in putting AI into practice, and what sets these leaders apart?
The biggest barrier is not intention. It's mainly execution. Banks encounter three primarily challenges when implementing AI: managing cost pressure, integrating legacy systems, and navigating regulatory constraints. Banks must balance their significant upfront investments required for AI adoption, including infrastructure, talent acquisition, and ongoing maintenance. Incorporating AI into existing IT infrastructure is complex, as older systems often lack compatibility with modern AI technologies. Financial institutions are subject to strict regulations as well, requiring AI systems to comply with data privacy, transparency, and fairness standards.
Now, considering everything that you've just mentioned earlier, how important would you say are data and governance in scaling AI responsibly in lending?
Data is the foundation of AI-enabled lending. AI is only as effective as the data behind it. The survey shows credit assessments scored the highest reliance on third-party data. More advanced AI tools, including agentic AI, need richer, timelier, and connected, trusted inputs. Governance is just as critical. Without clear roles and review processes, banks move slower and face greater internal frictions. The survey shows that only 57% of respondents have formal AI governance. The rest continue to rely on ad hoc processes, which slows adoption.
How about for you at Moody's? How is Moody's helping banks modernize credit organization and decision-making through AI and agentic solutions?
This survey shows banks want to move from pilot to production, especially in origination, credit assessment, and portfolio monitoring. Moody's supports its customers through our build, connect, and embed philosophy. We provide them with trusted data, analytical tools, and decision-grade intelligence that help teams make more consistent and informed lending decisions across the whole customer lifecycle. Our customers are adopting agentic credit memos, automated spreading, agentic early warning, and scorecards that help credit professionals scale loan volume and make faster and more informed credit decisions.
And looking ahead, Omar, what do Asia-Pacific leaders need to do to win with AI?
The survey gives a very clear roadmap. Leaders need to anchor AI to business outcomes, not technology exploration. They need stronger data foundations, which combine internal and third-party trusted data, hybrid model where banks can build and partner with third-party companies to help them build, and of course have a very robust governance that supports innovation acceleration. And I would also add that also the survey shows that leaders stand out by building connected data foundation, using third-party trusted data earlier, and having clearer governance structure. So for me, these are the main points that Asian banks needs to focus on.
Thank you so much for your time today, Omar. Looking forward to having you back on the program.
It's a pleasure, and thank you very much for hosting me.
Once again, that was Omar Akkor, Senior Director of Product Strategy at Moody's. For more news, visit asianbankingandfinance.net.